This conference will now be recorded.
Hi all, thank you for tuning in to the first video of The Big Long, where I'll talk about the markets, stock picks, and economic data in hopes on how to guide your investments. But this is only my opinion. I'm not a financial advisor, so this is for financial education. And so I'll just get into it. So what we have here is the Bloomberg economic calendar. Now, for this week, yesterday we had job openings for the month of June, and there were about 10.1 million job openings for June. Now, that's a really good sign of a strong recovery when it comes to the job market. And then for today, what we have is really just the Chicago Fed president speaks. Now, that whatever he could say, but can or will dictate the market if he brings up inflation or tampering. Some Fed members have been bringing up rising rates sooner than expected in the past couple of weeks. And so getting into more of this is the Fed chair, Jerome Powell, his term expires in 2022. And there's been a lot of talks who the next person will be. And the front running candidate would be this guy, Raphael Boystick, the Fed Bank of Atlanta. He's the president. And he's already talked about he's eyeing the fourth quarter to start tampering. And right now, inflation, depending on what side you read it from, the Fed's target is 2% inflation rate, while right now it's obviously more than that, and we see that. But they're calling it transitory, and they just want to make sure that there's no panic and everyone sees what they see. So this is a big thing because in 2022, obviously, that's when Powell, if not renominated, which that's Wall Street's guy, he was appointed by Donald Trump. So if this guy is appointed as the Fed chair, this will be a drastic shakeup, just because I could see him and Biden working closely together, and obviously with what's going on, more money could be printed. And if they raise rates sooner than expected or taper with the market, who knows what could happen. I'm not an expert. I'm just trying to help and give some knowledge out there. So next, what I want to talk about is the jobs, what I just touched on. So job market, this is, you could see, this is from the St. Louis Fed. It's called FRED, Federal Reserve Economic Data. So here you could see that in 2020, right, this was March to April, and we've been fighting back since then in payrolls. So this hopefully will continue upwards strongly. Next, this is another government website, U.S. Bureau of Labor Statistics. So the unemployment rate, right now, it's lower. It's definitely coming back down, but this is something that I would like to dig into more detail, and we'll get right into that. And then also changing payroll employment. We added 943,000 jobs in the month of June. Now, that's great, but we have to take into consideration that unemployment benefits are ending in September, so people might be just taking a job in hopes that either A, unemployment benefits get extended and then they'll end up quitting that job, or B, maybe they did have enough of collecting unemployment, or maybe they're fully vaccinated and now they're ready to get back out into the workforce. Because one thing that I did want to get back into this was the employment change by industry. So in the month of June, it was led by leisure and hospitality, right? So that's that's a lot. Now that could be led by like servers, restaurants. So that we have to dig into more detail to really see what was the leading pretty much space with employment there. And then what I want to get into is the average hourly earnings, which is increasing, but with CPI increasing, which is the bottom number, and this number will come out tomorrow. This is a big key indicator of inflation, and this is pretty much the increase of pricing goods that a consumer purchases. And you could see here that it's been increasing, and June was 0.9. So tomorrow's numbers, who knows what that will come out to. And with inflation being here, right, you could see that, yeah, wages, hourly earnings are increasing, but not necessarily that much. While the average hourly earnings, right? So 30.54 average hourly earnings. And this is hourly wages. So here, wages, right? Let's see, does it have a little description? Oh, typically it has a little description here, but so you could see that it increased, but it only increased by like a 0.01%. And if you want to take a look at the average weekly hours, you can see that they pretty much stayed consistent throughout May, June, July. Now, the big thing to pay attention to is continuing jobless claims, because even though it dropped off right here, that's still a lot, but at the same time, it's not as a lot as July 18th. But like I said, is this because we have 7.5 million workers that will face unemployment benefits cliff in September, like I said. Now, maybe people are starting to think about that, and they're just trying to get a job. And another thing is wages. Oh, sorry, not wages. Disposable income and consumer credit. So consumer credit is rising rapidly. And as I just showed you, wages haven't been increasing that much. Right now, consumer credit and the unemployment rate being so high, consumer credit has been rising ever since, because the government has been giving and printing out money, and that has been a very retail friendly spending opportunity, right? So when you look at consumer credit, you also have to look at disposable personal income, because as I showed you the wages and everything, nothing is really changing that drastically. What's just happening is more people are just getting jobs. So disposable income is the amount of money that people have left after paying everything that they have, I will have to pay as in obligations to use. And this number has been steadily decreasing ever since the last round of stimulus payments, right? So now you have the infrastructure bill being talked about, which should be getting passed within this week or so. Not too sure about that. But what I really want to harp on is that unemployment rate again, just because the 6.3, 6.2, 6, 6.1, 5.8, 5.9, and now 5.4% unemployment rate. It's high, but it's way better than it was a year ago. 14.8, 13.3, 11.1, 10.2. So we cut it down almost, cut it in half, right? And more. But when you're looking at this 2013 to about 2016 range, we're in line with that. And what happened before that was the Great Recession, 2008, the housing market collapse, right? So now what happened then was, now December 23rd, 2013. Unemployment benefits are expiring for 1.3 million. And what happened was Congress expanded the emergency unemployment compensation program in the recession to help people. So a little bit of history repeats itself, right? Because here we are, August 9th, 7.5 million workers. Now, 7.5 million is a lot different than 1.3 million, right? So that's just something to be mindful about. And then also, what I want to touch upon is, again, with the consumer credit being so high, right? Another thing that people don't have to pay, student loans, they're frozen, rent, the eviction moratorium just got extended again until October 3rd. So what's another crazy thing around that is all these people who have been having not to pay their rent, are they spending their money on things that they necessarily don't need? Because they have to owe that money back once the moratorium is ended and everything stops. Because right now you have actually in some places you have lawsuits going on with tenants and landlords about this, because landlords have lost so much money. Who knows if they'll actually be able to get the money back from their tenants who have been spending their money instead of saving. So that's another thing to look at. Meanwhile, as the FDA, right, are working fast as possible to approve the COVID vaccines. Now, we're talking about markets here, not getting political. The reason I bring this up is because the eviction moratorium ends October 3rd. And then the FDA announces this. And then what I want to show you is, come on, we're almost there. Inside the approval process. So inside the approval process, right, they state it right here. In July, Pfizer announced the FDA had granted its vaccine a priority review, accelerating the process from 10 months to 6 months, meaning it should be approved and granted by January of 2022, right? So as you get reading more and more, now you can see I long felt that the FDA would approve the vaccine probably within 3 to 4 month time frame when this application was submitted. Those applications were submitted about 2.5, 3 months ago. So I think it puts you on an end of August, September time frames of when it's going to be approved. So right off the get-go, they're trying as hard as possible to get it approved. Now, can this happen? Sure, if the Delta variant and lockdowns happen, which who knows what can happen. Like I said, I'm here to just give knowledge and give market information to you all, so you all could do the same. So next, what I want to get into is the core meat of this, is growth and value stocks. So right off the bat, this is a growth atmosphere, and growth stocks are pretty much, I'll use an example, Tesla, that's a growth stock. It excels when growth could be rapid accelerated, and that's when interest rates are low. And that's also meaning valuations are kind of overextended at that point. But value plays are undervalued at that point in time when growth is the move. So when it's value stocks in the lead, that's like your Berkshire Hathaway shown on the screen, Procter & Gamble, Johnson & Johnson. So value stocks are pretty much traded or trade for valuations below that of the average stock, which are in the S&P 500, as well as growth stocks are in the NASDAQ, which the triple Qs. So the triple Qs is pretty much the growth S&P 500, if that makes sense. So value stocks and growth stocks are a little different when it comes to that play. And now the options. So the reason why I brought up growth and value is because if you look at all this, these are options. Now options are, I'm not going to get into options yet because that's more of an educational video that I need to put together, but this is the most options volatility yesterday. And as you can see, these are just all growth plays right here, all these. So looking at this, you could kind of see what kind of stocks are growth plays. And then when you get to the ETFs, right, which is crazy, just because there is not that much volume going into the stock market. And what that means is not a lot of people are buying stocks, but people are playing with options. So the SPY, right, which is the S&P, 2.1, well, let's call it 2.2 million of options volume. And the triple Qs, so this is the value, this is the growth. So look at this amount of option volume. Now that is insane. Why? Because that means people are betting. Well, first of all, we have to dig deeper into the options play and see if it's the long-term options or if it's the short-term options that are really driving this, because this is only the volume from August 9th, which is yesterday. But just to show you that drastic change in value and growth option play is kind of crazy, because what I'm going to do now is bring up charts. So the SPY is what we were just talking about, and like what I have here is volume, right? So on the volume, I have 41.2 million here, and this is the value plays, right? So it hit a high the other day of $442.94, and this is the daily chart, and this goes back a long time. And you'll see some circles here and some lines here, which are kind of indicators, as well as these. And like I said, that's an educational video. I'll get into that stuff later. If you guys want me to show you things like that, by all means, I would love to do that. But I just want to share my knowledge in the markets and hoping that whoever tunes in could learn something, or maybe takes a different perspective of the way that I look at things and fine tunes it, because I know I don't know everything. I'm not the smartest one. So what's going on right now is you see down here is flashing a little bit, and this is the gold futures. Gold right now has had a sell-off the past couple of days, and it's hit this red line here with this 3 circles, right? Now that's just an indicator of maybe a triple bottom, but also a triple bottom is an indicator that I'll also get into in an educational video, but it's also trading along, well, the support line of the fib level 38.2%. So this is something that I'm keeping my eyes out as the infrastructure bill is getting voted on, and obviously crypto is doing a good job. So that's another thing. I'm not an expert in crypto. Do I hold crypto? Yes, but I hope to bring people on here to actually talk about that stuff. So to get into more, what's on here is the triple Qs. Now this is the growth stocks that I was talking about. So you could see here, right? Now we hit a high of $369.91. Now what I'm trying to get at is I showed you that option volume of the SPY and the S&P was 2.2 million, right? Now look how much this volume is, right? Like this red bar right here was 147 million. Now that's a lot, because here it's 41, almost 100 million difference, right? Now that's what I'm talking about, is the markets are moving on low volume because of the options. There's a big casino out there. You're literally, options is a straight up gamble, and it's an educated gamble if you know what you're doing, but like with no heavy volume in the stocks itself, that option volatility, and this is another educational video that I'll put out, is that it could drive the stock up due to other factors and variable factors. And then once pretty much there's a sell-off, it could drop drastically. And the same thing goes for the triple Qs that you could see. And just to let you know, this graph on the side is volume by price. So you could see during these price lines of how much volume there really is going on, just as much as this is the same thing. This is volume as well. So same thing in the triple Qs, right? And what we have right here is the RSI, which is one of the main normalized indicators that a lot of traders use. Pretty much if it's above 70, then a stock is typically overvalued. And what that means is it's pretty much overbought at that point, and that could signal a sell-off, as in, but I don't want to get too in the weeds on that just because there's a lot more that goes into that. So I'll just stick to the simplified way. So if it's above 70, it's signaling that it's overbought, and if it's below 30, it's signaling that it's oversold. And that's kind of how like you could dictate on where a stock is going. For instance, the RSI came down to 41.31 here, right? And then it started making moves upwards, and now it's kind of consolidating in this way. So if it shoots up, will it pass that overbought, or will it shoot down? So I'm just going to keep my eyes on that. Gold, this is going to be an indicator of possibly tampering, maybe, depending on what the markets do. Like I said, crypto's doing good right now, so who knows what can happen to gold. Then what we have to the left is the dollar futures. So what we have right now is the dollar actually is just rising, and right now if this surpasses like we have resistance here, right? Now we have resistance at 93, let's call it 10 right here. So if it gets up to this and it comes back to $94, now we're looking at, what is this, 2020? Yeah, we're looking at like Q4 2020 levels, just before more stimulus packages came out too. So this is something to keep your eyes out when looking into the market, just because that could be a sign that the Fed tapers. And like I said in earlier the video, there's just been some talks of Fed chairmen's quote unquote signaling that we're seeing progress, but we'll let you know when we're actually going to do something in the markets. And as you see here, gold, it was at 17.29 not too long ago, but so this is something I'm going to keep my eyes out on. But as I'm getting into this, I hope someone or you all learned something. And if you like the video, just give it a like. And if you would like more in-depth educational videos, please just let me know. I mean, I'm probably going to do them anyway, but it just gives me more, I guess, of determination to get it out there if people actually want it. So I hope you liked the video, and looking forward to another one. Have a green day, everyone. Look out for some things that I talked about, and have a good day. Bye.